In a world where cryptocurrency continues to dominate headlines, significant turmoil has unfolded in the market. The fallout from massive losses, regulatory challenges, and potential game-changing events are shaping the future of digital assets. Here are today's top 10 stories you need to know. Emerging tokens are increasingly capturing the interest of investors as they seek new opportunities within the volatile cryptocurrency market. With established cryptocurrencies facing downward pressure, lesser-known tokens are being scrutinized for their potential upside. Analysts suggest that some of these emerging assets may offer significant returns in the long term. The trend reflects a shift in focus towards projects that demonstrate real-world utility and innovative solutions. Investors are advised to conduct thorough research before diving into these options, as the market remains unpredictable. The future of these emerging tokens will depend on their ability to prove themselves amid ongoing market challenges. As interest grows, the dynamics of the cryptocurrency market could shift, paving the way for new leaders in the space. Stakeholders are encouraged to stay informed and adaptable as this trend unfolds. In a landscape dominated by volatility, decentralized finance, or DeFi, projects are attracting increasing attention from investors. As traditional cryptocurrencies face challenges, DeFi protocols are being viewed as potential avenues for growth. These projects offer unique value propositions that may appeal to a broader audience. The interest in DeFi is driven by its potential to democratize finance and provide innovative solutions to existing financial systems. Investors are exploring opportunities in this sector, as it promises to deliver utility and revenue generation. However, the volatility of the overall market poses risks that investors must carefully navigate. The future of DeFi could be significantly influenced by regulatory developments and market conditions. As the industry matures, stakeholders are hopeful for a clearer framework that will foster growth and innovation in this space. The coming months will reveal whether DeFi can sustain its momentum amid ongoing challenges. Recent market volatility is having a tangible impact on cryptocurrency adoption rates. As prices fluctuate dramatically, consumers and businesses alike are hesitant to fully embrace digital assets. This reluctance is evident in transaction volumes and interest among new investors. Additionally, regulatory concerns are further complicating the landscape for potential adopters. Many businesses are delaying their entry into the crypto space until clearer regulations are established. This cautious approach reflects a broader sentiment of uncertainty that is permeating the market. Despite these challenges, advocates for cryptocurrency continue to push for broader acceptance, emphasizing the long-term benefits of decentralized finance. As the market stabilizes, analysts predict that adoption rates could eventually increase, leading to more widespread use of digital currencies in everyday transactions. Stakeholders are closely monitoring these trends as they look to capitalize on future growth opportunities. The altcoin market is currently navigating a challenging phase characterized by heightened uncertainty as investors reevaluate their strategies amid ongoing market volatility. This comes in the wake of a broader trend where speculative investments are losing favor, prompting a shift towards altcoins that exhibit tangible revenue and utility. Experts suggest that the anticipated alt season may not manifest broadly, instead favoring a selective recovery for projects with strong fundamentals. This shift is crucial as liquidity is increasingly being redirected from high-risk assets towards more stable options, reflecting a more cautious investor sentiment. Bitcoin's price movements remain a critical factor as it continues to dominate market dynamics and heavily influence altcoin performance. As the cryptocurrency landscape evolves, adaptability will be key for investors seeking long-term success. Stakeholders are urged to stay informed about emerging trends and developments, particularly as regulatory scrutiny increases. Looking ahead, a focus on established altcoins with solid use cases could prove advantageous in the coming months. The cryptocurrency market faces a significant roadblock due to a regulatory impasse in the United States. Political instability, particularly stemming from Donald Trump's refusal to sign a housing bill that includes a ban on central bank digital currencies, poses a major threat to the market's recovery. This deadlock could deter institutional investors who are crucial for the market's resurgence. Analysts warn that the lack of clear regulatory frameworks is contributing to market volatility. As the industry seeks legitimacy, the absence of supportive legislation hampers growth opportunities. Investors are left in a state of uncertainty as they navigate the complexities of the current environment. The need for bipartisan support for regulatory clarity is more pressing than ever. As discussions continue, stakeholders are hopeful for a resolution that will pave the way for a more stable investment climate in the crypto sector. In an intriguing development, analysts are predicting that a lesser-known cryptocurrency could see a dramatic price increase, potentially creating generational wealth for early investors. This excitement stems from a reported 50-fold price surge anticipated for this emerging token, which could significantly impact the broader market. As traditional cryptocurrencies like Bitcoin struggle to regain momentum, this speculation highlights the ongoing search for value within the crypto space. Analysts attribute this potential growth to the rise of decentralized finance protocols, which have gained traction due to their innovative features. Furthermore, the shift in focus towards projects demonstrating real revenue and utility is reshaping investment strategies, prompting investors to reassess their portfolios. The current period of volatility may ultimately lead to a more selective recovery, favoring innovative projects that capture investor interest. As the crypto landscape evolves, the importance of thorough research and informed decision-making cannot be overstated. Investors keen on maximizing their potential gains should closely monitor emerging trends and consider diversifying their holdings in this dynamic environment. The cryptocurrency market is currently experiencing significant pressure, with Bitcoin's recent price movements confirming bearish trends that have left investors uneasy. This downturn follows a period of relative stability, where Bitcoin seemed poised for a rally. However, traders are now witnessing a rejection of previous support levels, indicating that market sentiment remains fragile and uncertain. Historically, Bitcoin and Ethereum have often set the tone for the broader crypto landscape, and their current bearish characteristics raise alarms about the future of alternative cryptocurrencies. The macroeconomic environment surrounding the US dollar adds another layer of volatility, as fluctuations in liquidity influence investor behavior and decision-making. With many analysts predicting a potential equities correction later this year, some investors are left questioning the sustainability of current valuations in the crypto space. As this situation continues to unfold, stakeholders are advised to remain vigilant, closely monitoring market dynamics for any signs of a reversal or further decline, particularly as regulatory developments could reshape market trajectories in the coming months. The Ethereum Foundation has announced a significant restructuring of its core development unit, which includes a 20% reduction in its workforce. This decision comes amid an increasingly challenging landscape for blockchain technologies, as Ethereum seeks to optimize its protocols and enhance operational efficiency. Founded in 2014, Ethereum has been a pioneer in decentralized applications, but recent setbacks in the broader cryptocurrency market have put pressure on its position. The decision to rename its research and development unit to Protocol reflects a strategic pivot aiming to consolidate resources for future advancements. Ethereum is currently grappling with issues of scalability and regulatory scrutiny, which pose risks to its long-term viability. The impact of this workforce reduction could reverberate throughout various projects that depend on Ethereum's infrastructure, potentially stalling innovation in decentralized finance and non-fungible tokens. Investors and stakeholders are closely monitoring how these changes will shape Ethereum's roadmap. In light of these developments, the Foundation's ability to adapt and innovate will be crucial for maintaining its competitive edge in the rapidly evolving cryptocurrency ecosystem, particularly as it prepares for the upcoming Ethereum upgrades. In a shocking turn of events, Strategy, formerly known as MicroStrategy, has reported an unrealized loss of over $13 billion on its Bitcoin holdings. This staggering figure surpasses the market capitalization of many popular cryptocurrencies, including Dogecoin and various DeFi projects. The company has invested heavily in Bitcoin, amassing a staggering 847,363 units, which now places it under immense financial pressure. The price of Bitcoin has been highly volatile, and since reaching a peak value, Strategy stock has fallen below $100 for the first time since early 2024. This situation starkly illustrates the significant risks associated with concentrated investments in digital assets, particularly for institutional players. As the cryptocurrency market continues to fluctuate, Strategy's substantial losses may erode market confidence among other investors, potentially leading to a broader sell-off. Analysts are closely monitoring the implications of these losses, as they could influence the strategies of other companies considering similar investments. The outlook remains uncertain, with many investors awaiting clarity on Strategy's next moves. Observers are particularly interested in whether the company will attempt to stabilize its position or further divest its Bitcoin holdings in response to these unprecedented challenges. The coming weeks will be critical for Strategy's future. Bitcoin is now facing a critical price crisis, with reports indicating a sharp decline in its value. After hitting an all-time high of $126,198.07 last October, Bitcoin has suffered a staggering 52% drop, recently trading around $60,000. This significant downturn reflects broader volatility in the cryptocurrency market, where investor sentiment has shifted dramatically. Analysts warn that this price drop could trigger a cascade effect, especially if it breaks below the $60,000 threshold, which many view as a psychological support level. The uncertainty surrounding the cryptocurrency market is compounded by political instability, particularly with Donald Trump's refusal to sign a housing bill that includes a central bank digital currency ban. This regulatory deadlock is raising concerns about the future of institutional investments in cryptocurrencies, as businesses and investors alike seek clarity on the regulatory landscape. As the market grapples with these issues, many investors are left wondering what the future holds for Bitcoin and other digital assets. The upcoming weeks will be crucial as traders await signals from the Federal Reserve that could further impact prices. A break below key support levels may lead to increased selling pressure, prompting fears of a larger market collapse. Investors should prepare for potential volatility as they navigate this uncertain environment. Thank you for tuning in to our countdown of today's most impactful stories. Which of these developments surprised you the most? Don't forget to like and subscribe for more updates.